Welcome to A Few Minutes with the CEO. My name is Al O'Grady, and for the next few minutes, we'll be talking to the President and CEO of Oromin Explorations, Mr. Chet Idziszek. Oromin is a junior resource company focusing its attention on its flagship property in Senegal. Now, the date of today's recording is Friday, October 12th, and recently the company issued a very interesting press release regarding its indicated and inferred resource estimates. We'll be talking more about that and how it'll be impacting the company and its shareholders in just a minute. Oromin trades on the Toronto Stock Exchange under the symbol OLE and on the over-the-counter under the symbol OLE, P as in Paul, F as in Frank. Mr. Idziszek, welcome to the program.
Well, thank you very much.
Okay. Chet, as I said in my introduction, you had a press release not that long ago about your indicated and inferred resource estimates. Chet, walk us through this. What's the latest, and really, what does it all mean?
Well, what it means is that our project is now the largest and the highest grade gold project in the country of Senegal. So what this release is an update of our inferred and indicated resources from 2010. And the importance of this thing here is those resources in 2010 were used for a feasibility study that were put out in mid-2010. And this increase in resources we have is substantial. For example, our indicated resources went up 49%. Our inferred resources went up 109%. And this mineralization is split up between what we call the Mesado deposit and the Gluma deposit. They're about 2 million ounces each. First one's grading 1 1/4 ounces, and the other one 3 1/4 ounces. So this is quite significant, in a sense that in Q4 we're having a feasibility study, reserve update, and an update to our PEA for the heap leach resources. So a significant increase in evaluation of project will come out at that time.
First question for you, Chet. Sorry to interrupt, but I have to ask you this. What was your reaction to that? Were you surprised? Was it something that you realized all along, more of a quiet confidence? What was your reaction to these numbers?
Well, we've been sort of drilling, throughout over the last couple of years. We put up some updates last year, but the most important thing is we really have not completed drilling to an extent that we wanted to for our feasibility study update. This drilling that we completed over the last 2 years brings it up to that stage. The project now is at a construction-ready, de-risked, so we're ready to go into construction or into some sort of a sale process, for the project. So we've also received our environmental impact study and all the other government approvals that allows us to go ahead and proceed. So this is really a very significant time for us.
Has that caused any changes in terms of your short-term or even your long-term goals?
Well, we're currently in a process right now of strategic alternatives, and what that includes is the potential of taking the project into production ourselves, and/or bringing a partner in or somebody to take out the company and our other partners with the project. So it's very, very important, especially the fact that the project is now the highest grade gold project in the country, and it's much larger than the others. And the one that's next to us is called Teranga. They're an operating mine. And our grade difference in indicated resources is 56% higher than the operating mine, and inferred resources are 157% higher, and we have larger total resources, and our upside potential is quite significant.
Okay, I think you're just about to answer my next question. I was going to talk to you more about that feasibility study that you have for Q4. You had mentioned some of your goals. What are your other expectations with this feasibility study?
What it says is basically, in 2010, the feasibility study then showed us that we could be producing 187,000 ounces of gold per year in initial years, 9-year mine life. We subsequently completed an optimization study, which adds another $40 million to the net present value, bringing it up to $400 million at $1,200 gold price. Now, remember, gold now is trading at $1,750, so there's going to be real market change in evaluation. And subsequent to that, we in May of 2011, we completed a PEA, preliminary economic assessment, on the heap leach mineralization that we have in the other targets. And that added another $60 million NP in net present value. And that brings the total production up to about 230,000 ounces per year and this is prior to this feasibility study update that's coming in Q4. So it's going to be a significant increase.
We've been talking about the present, a little bit in the future, going into Q4. Let's talk about the past. Give us some background, if you would, maybe some history in terms of how you actually acquired this gold project to begin with.
It brings us back into 2004, where we acquired it through an international tender process. We were competing with large mining companies around the planet. This particular project was tied on to a mine that was discovered, a gold mine that was discovered by the Russians and BRGM back in 1961. And in the due diligence that we did in the areas around it, we looked at potential, and we found out it's quite significant in a sense from an alteration standpoint and the amount of quartz mineralization that is laying around and the right geology and structure that we interpreted. We said, well, you know what? That gold deposit in there is probably one of a group of deposits in there. And so we took the project on, have spent $150-some-odd million in exploration along with our partners, and we have 13 other new targets on top of that. So we were sort of right, and it's worked out really well, and this is going to be the next new gold deposit for the country of Senegal.
You had mentioned Senegal. Chet, I've talked to literally hundreds of different presidents and CEOs. You're the first guy I've ever talked to that has a project going on in Senegal. Does that present any sort of opportunities or any sort of hurdles? I know some investors might be a little bit leery about investing in Senegal. How do you respond to any of those allegations?
Well, Senegal is sort of a low-risk jurisdiction in a sense. There's never been a war in Senegal. It became independent from France back in 1960, and the government changed here just in the spring of this particular year. And the mining laws in there are quite competitive. For our project, for example, we have a mining license, and we also acquired an 8-year tax-free period starting in 2010 for the project. And that is really competitive. The mine taxations are very fair. They're 25%. And the government is, one of the most successful post-colonial democratic transitions, and a great place to work. People are very, very supportive locally, as with the federal government, and so the relationship, is continuing, with it. And it's a very, as I mentioned, very well-developed mining code and favorable tax regime. One of the best places to work. Actually, the Prime Minister of Kenya is in Senegal right now. Actually, there was a meeting with companies in the mining business, oil and gas business, and the president of Senegal was in New York. We were there a couple of weeks ago, and just basically saying that they're open, to the investment communities, in particular in the oil and gas and the mining side. And it's, as I mentioned, it's very, very competitive. And it's a great place to be. Okay,
Chet, a lot is happening as far as gold prices are concerned. I mean, the first 6 months of the year, certainly they were going down a little bit, maybe if you want to call it a recovery, what have you. But certainly the last 6 weeks, gold is certainly heading north again, certainly flirting with 1,700 and even going higher. What sort of impact is this having in terms of your day-to-day operations on the company as well? And are we going to see $2,000 gold in the next few months?
Yeah, from a day-to-day operations, gold being perky is very, very interesting to us because at the time that we're putting out the resource update and feasibility study update, you're having increased prices in the gold. And firms like RBC and Canaccord Capital, their long-term forecast for gold, peaking at $2,000 plus, and long-term gold price, in excess of $1,400, $1,500. Now that's really good for us because our feasibility study in 2010, we're using $880 gold. And by the fact that we have a higher grade deposit than our neighbor that is producing gold right now, then the higher the gold price, the larger the profitability. So that's all good news for us.
Okay. Chet, lots of different companies on the TSX and also the TSX Venture Exchange for that matter. For maybe a junior resource investor kicking the tires, taking a look at different companies, what is it that sets you guys apart from your competitor down the street?
Well, we started out looking at a grassroots project in Senegal. We had 225 square kilometers. And a few years later, we've completed, or just completing a feasibility study, the ultimate one, and de-risked the project, got all of our approvals in with regards to taking production. We are now a construction-ready project, and that's really the difference. So we're a much higher level. We know where the gold deposits are. We've drilled them up. We know the metallurgy. And all that stuff is good news. So we're ready to go into production either by ourselves and or through a partner and or through an acquisition. And that's what we're working on right now. Getting the news out in this feasibility study and the PEA update is very, very important because it updates 2-year-old valuations to today's gold prices and the increase in the ounces in the ground that we have. So it's very important to us.
Okay. Chet, that's it as far as the formal questions are concerned. As always, my guest gets the last word. Any final thoughts that you want to add? Maybe something we didn't touch on, something that you feel needs a little bit more attention? You get the last word.
I think the important thing is, how does our deposit, compare with operating mines in the area? And then we're in the eastern part of Senegal, right near the border with Mali, and there's IM Gold, and there's Anglo Gold Ashanti and Rand Gold collectively, and we're all in the same gold district, basically. So we're just about 30 to 50 kilometers away, and over 50 million ounces of gold have been found in the region. So the upside on this particular area is quite significant.
Okay. On that note, Chet, I want to thank you very much for your time and telling us more about Oromin Explorations.
Thank you very much. It's a pleasure chatting with you.
And Oromin Explorations trades on the Toronto Stock Exchange under the symbol OLE and on the over-the-counter under the symbol OLE, P as in Paul, F as in Frank. And you've been listening to Mr. Chet Idziszek, President and CEO of Oromin Explorations, on A Few Minutes with the CEO, produced by RBL Communications. I'm Al O'Grady. Thanks very much for joining us.